Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we are tracking for you in the BNN Bloomberg newsroom. Shares of Empire are falling this morning after the company missed estimates on adjusted profit. The Nova Scotia-based grocery company owns brands such as Sobeys, Safeway, Foodland, Farm Boy, and Freshco. The company says the decline in profit was driven by higher staffing costs as well as spending on store upgrades. However, it wasn't all bad news as Empire reported a slight beat on sales for the same quarter. Shares of Oracle are down sharply today. Look at that, more than 13, almost 14% after the company reported lower than expected cloud sales and a rise in AI spending. Investors are worried the increased spending on AI data centers is taking longer than expected to translate into cloud revenue. Oracle is expecting capital expenditures for the fiscal year to come in at US $15 billion above what it forecast in September. Transcontinental logged lower profit and revenue in its fourth quarter, missing estimates. The Canadian packaging and printing company says the retail services and printing sector experienced challenges in the quarter due partly to labor disruptions at Canada Post. Now, earlier this week, Transcontinental agreed to sell its packaging business to U.S.-based Pro Ampac Holdings for $2.2 billion. The move will allow it to focus on transforming its retail services and printing and publishing segments. And taking a look at the markets right now, TSX in the green again, up by 0.34%. And mixed bag south of the border because of those Oracle earnings. That's dragging quite a bit down. You can see the S&P 500 is off by 0.3. The Dow is up by almost a point, but the NASDAQ is down by 0.93, and that's Oracle leading that down. The company behind Sobeys reported its latest quarter, which saw $159 million, down from $173 million in the same quarter last year. Let's get more on those results from Chris Curlow, Senior Portfolio Manager and Investment Advisor at Canaccord Genuity. Chris, thanks very much for joining us today. Empire, the shares dropping right now with what's going on. Any idea what's driving it?
Just kind of a mixed bag results. The stock's kind of been in a bit of a downtrend lately, not doing too well in this post-tariff era. The grocery business in general is a very low margin business, tough to make a lot of money. So when those profits get crimped, it makes it harder to keep doing what they've been doing. It's not something that we've owned. It just doesn't screen well. We look for high-paying Canadian dividend stocks, and it's got a bleak dividend, so not a name that we own in the LWC Canadian dividend portfolio.
Yeah, so it said expenses were up, employees and wages was an issue. Does any indicators that they might be getting it under control, or is it?
It seems to be a lot of the same problems. I mean, wage growth in Canada, it hasn't subsided. It's one of the drivers of inflation. The automation and the AI productivity gains that we're seeing in other sectors just really isn't there for grocery just quite yet, probably a 2027 story. So doesn't seem like this is a buying opportunity at this exact moment. But like I said, not a name that I follow too closely just because it doesn't really fit into the criteria we're looking for.
Any in that realm in the grocery store area?
Consumer staples in general is just an underweight for us, just not a lot of companies in Canada in the space in general. It's, you know, couple grocers, cheese company, stuff like that. But so we've just been underweight staples. We benchmark more the TSX Canadian Dividend Aristocrats category, which, you know, has a pretty low staples weight in general.
All right, we're going to get to some of those stocks you want to look at, but I want to talk a little bit also about Oracle. It's down today. Your thoughts on that?
Yeah, I mean, it's part of that center of the AI universe. You know, they have the big open AI contract. It's been under pressure since they started raising debt to meet their data center obligations. We look closely at the bond market when analyzing a company. It tends to be a great leading indicator, and the CDS spreads have been widening out for quite some time now, even further here. And if their debt moves into that triple B, high yield category, I think that could be possibly another leg down for the name. Legacy business that's trying to catch the wave here and just hasn't been a leader in the space.
How close is it to that triple B?
I believe it's bordering it at this point right now, just looking at it briefly this morning.
Yeah. What would it take to kind of redirect that and reverse it?
I think it's just such a competitive area. It's probably late innings for a lot of these AI names. We added recently to NVIDIA kind of the toll collector on the toll route of the whole data center game. Mm-hmm. A lot of headway or noise around kind of the competition around the GPU space from AMD, the other hyperscalers building their own chips. But, once a developer starts using CUDA in their tech stack, it's a very high switching cost. And you can get NVIDIA today the same price you could in the summer. And with their data center business growing at 100%, I think, fundamentally, we thought it was a good time to put a bit of chips behind that idea.
All right, so you're liking NVIDIA right now. Let's talk a couple of the stocks you're focusing on. CF Industries.
Yeah, that's when we got off, actually. So we've been in it for a while. They've made some inordinate profits during 2021 to 2023 during the Ukraine-Russia problem. They're one of the largest nitrogen fertilizer companies in the world. And so there's kind of this arbitrage between U.S. natural gas and European natural gas where they can create these products in the United States and ship them overseas. That game's kind of been fading with some resolution on that side. And so we've just rotated into Nutrien, Canadian, market leader here. They do the nitrogen game and benefit from some of those tailwinds that I've mentioned, but it's much more diversified business. They have a retail focus, obviously out of Washington, trying to support farmers south of the border. That's great for their largest output, which is potash, and so following the acquisition of Potash Corp here in Canada. And so we see that after years of kind of underutilization, that demand picking up there. So it's just kind of a pair trade into Nutrien from CF Industries.
Any concerns with Nutrien with the potential tariffs on fertilizers?
Yeah, I mean,
the mentioned tariffs, they seem to have faded away from the start of the week.
Yeah, totally. I mean, it's kind of like one or the other. Like, you want to support farmers, but you want to increase the price of what they need to do their job. So I think it's going to be challenging. Canada, we're the largest exporter in the world, maybe outside of the national company in Belarus. But I think it's going to be challenging for them to lay the tariffs on that. Obviously, it's made some headlines here, but solid valuation, good dividend, screened really well. We got it in the low 70s. I think below $80. It's a very interesting name to be in a portfolio.
Okay, a couple others. We were talking about NVIDIA, but Freeport, McMoran. Is it McMoran or McMoran? I always get it wrong.
Freeport McMoran.
McMoran, there we go.
Say it real quick and no one will know.
McMoran.
Yeah.
Freeport.
So Freeport, largest copper producer in the world. Love the copper play. It's the backbone of everything, industrialization, the Internet of Things, this AI trade. We've been in the name for a while. We added to it in September when they had that mudslide at one of the largest mines in the world. That kind of slowed supply, and so we added then. It faces a lot of technical resistance here in the mid-high 40s. Mm-hmm. So we've been pairing it off, rotating into some gold names that we like. So not fading the material space in general, but just think that Freeport struggles to kind of break above $48, $50. So yeah. And so
you've been moving over to Alamos?
Yeah, great story, good visibility on them increasing production 25 to 27% in the next couple of years here. With gold stabilizing around $4,000 an ounce, it's a fantastic space. Great hedge against this U.S. currency debasement, which has been picking up steam, something we've been talking about for a few years now. Gold's been a huge part of our overall asset allocation since the summer of last year. And so with Alamos, you could see the stock kind of trending sideways there. We thought it was okay to increase we had taken profits and just kind of came back to a full position on that name.
Okay, we'll leave it there. But Chris, thank you very much for joining us. We appreciate it.
Thanks a lot for having me.
Chris Curlow is Senior Portfolio Manager and Investment Advisor at Canaccord Genuity. Up next, Dollarama raised its annual sales forecast today after beating expectations in the latest quarter. BNN Bloomberg's Lindsay Biscaya will break it all down for us after the break. Dollarama raised its annual sales forecast today after beating expectations in the latest quarter. For more on this, we're joined by BNN Bloomberg's Lindsay Biscaya. Lindsay, thanks as always for joining us. What do the numbers look like?
Well, this is really interesting because most of this demand is being driven by Canadian shoppers in Dollarama's Canadian stores, accounting for more than 90% of Dollarama's total sales in this latest quarter. So the company is saying it's seeing more shoppers coming through its doors more often, buying more stuff, and we're seeing the results of that in this latest quarter. Net sales up 16%, quarterly sales up 22%, and as I mentioned, when it comes to Canada in particular, comparable store sales increased by 6%. Currently, there's more than 16,000 stores in Canada. 19 new stores were added this year. And so we're really just seeing that demand coming from Canadian shoppers. Dollarama is rolling out other stores in Latin America, in Australia as well, under different names, not under the Dollarama name. But primarily, we're seeing that growth here in Canada. And it goes to show a sign of the times, too, right?
Yes.
People are looking for cheaper
Try
options.
and stretch the dollar as much as they can, right?
Yeah, exactly. Like you can buy everything at Dollarama, really. Like you can buy party
Pretty
supplies, office supplies,
candy, chips,
food,
soap, plates, you name it.
You can
It's
buy
all there.
plates and cutlery there. So yeah, I mean, it's a sign of the times for sure. And Dollarama also expecting the future to look bright as well.
All right. With that, what's their guidance?
Yeah, so they're increasing their guidance for 2026. And again, this is actually specific to Canada, raising comparable store sales target to a range of 4.2 to 4.7%. That's up from 3 to 4%. Gross margin expected to increase slightly as well. Capital expenditures are expected to be lower. And so, yeah, Dollarama raising most of its guidance up apparently in the new year. It's looking good. And also in this latest quarter, Dollarama talking about Halloween shopping, how that boosted sales as well. They're expecting the holiday season to help boost sales and well into the new year as well.
Do they sell costumes there?
They do.
Do they? Because I know you get all the little trinkets and everything. But the costumes?
I think they do sell costumes. Yeah. And like the little packages for the most part. Yeah, so that's not what they're known for, but people are going there now to maybe save a couple bucks. Yeah.
All right, Lindsay, thank you for that.
Thanks.
BNN Bloomberg's Lindsay Biscaya. Well, U.S. forces intercepted and seized a sanctioned oil tanker off the coast of Venezuela. A senior Trump administration official referred to the ship as a stateless vessel that was last docked in Venezuela. U.S. action may make it much harder for Venezuela to export its crude, as other shippers are now likely to be more reluctant to load its cargoes. Bloomberg energy reporter Stephen Stupczynski has more.
This is mostly due to their expectation that it was actually going to bring the oil to Cuba. Now, of course, the Trump administration did say that this is already a sanctioned vessel. They're trying to ratchet up pressure on Venezuela. And so they did this, they sort of really upped the pressure on that government and also the dark trade in general by seizing it. This was a surprise move. A lot in the market weren't expecting the Trump administration to do this, and this does show more pressure on the government for Venezuela. Now, of course, if they were going to deliver this crude to Cuba or not, that's a big question. This is a very large crude carrier. Trump was correct. It is big, 2 million barrels of oil, and it's abnormal to send carriers this large to Cuba. So where was its actual destination is still unclear. Was it actually going to China? But either way, the Trump administration did decide to do this, saying that because the ship was already sanctioned, we have the authority to board it and take it, as you see with these pretty striking images that were posted on social media.
2 million barrels. 2 million barrels. Yeah, that is a sizable tanker. What does this mean for the oil market, Stephen, then? I'm looking at Brent prices a little softer in the session today.
So this is the thing. If this sort of thing were to happen, let's say 2 years ago when the oil market were tighter, I think you would have seen a pretty large spike in Brent and WTI prices. But we're in a time when it's really frothy. We're entering a glut period. Now, Venezuela is a pretty sizable exporter of oil. Despite the sanctions, I think they're shipping about 500,000 barrels a day, a lot of that going to China and elsewhere. But through dark fleet vessels, but that is still barrels on the market that while they are sanctioned, They're able to find their way there, and the U.S. hasn't really taken any cracking down measures, which is why taking this ship would have an impact theoretically on the flows, because will ships now want to dock at Venezuela? Even if you're a dark vessel, are you worried about getting taken by the U.S. government? Are you worried about getting boarded? So while this is something that does tighten the amount of output from the country potentially, the market has a lot of capacity to replace it. China has other places to go. We're in a time when U.S. output is very strong. OPEC Plus has been increasing output over the last most of this last year. And demand in China actually hasn't really grown as much as some in the market had been expecting for a few years back. So you are entering a period which the IEA calls quite a large glut in 2026. So prices have been, they rose a little bit today, but they're down a bit and they are weaker.
And that was Bloomberg's Stephen Stepchinsky. Next up, we'll go over a new report that highlights how well each province is performing in different housing categories. That's next. A new report grades the performance of each province and their largest municipalities' abilities to manage housing based on 36 indicators in 5 categories. And you may or may not be surprised as to what Ontario scored. For more, we were joined earlier by Mike Moffat, founding director of Missing Middle Initiative. We kick things off with what their company aims to achieve in housing.
We're a think tank housed at the University of Ottawa that looks at housing issues and any issues relating to Canada's middle class.
Right. And I think part of your work, though, has been on young people and how housing in particular, they've missed out.
Yeah, absolutely. That we've seen over the last couple decades, things get harder for young middle-class Canadians, and most of that, not all of that, but most of that is revolving around housing. That we're seeing home ownership rates fall, young people having to live with their parents longer, getting priced out of our big cities. So it's a top of mind concern for us at MMI.
And what is this middle housing that you think we need to build more of? It's triplexes and duplexes, for example.
Well, it's more of everything, but certainly we need more what we call family-sized housing. We've been pretty good over the last 15 to 20 years of building, one-bedroom condos and things like that. But where we're really short are kind of 3-bedroom homes, the kind of place where a couple might be comfortable raising a child or two.
So this report, what criteria did you use on? Give us one or two. There are many, I know, but what were you trying to achieve with this report when you compared the provinces?
Well, we just wanted to look at how different provinces were doing. So we got 36 different indicators revolving around both policy, so the types of policies that they were implementing, and outcomes, what are they achieving? And interestingly, we found that provinces did best, not so much by implementing good policies, but by avoiding bad policies. So things like high development charges, high land transfer taxes, and so on. They seem to be negatively correlated with outcomes like young people being able to buy a home and affordability and so on.
Let's look at the provinces that you think have been doing a relatively good job, starting off with New Brunswick and PEI, the two Atlantic Canadian provinces. What in particular, why have they been achieving goals, do you think?
A lot of it is just they're getting out of their own way, that they're not implementing a lot of policies that are, again, harmful taxes. If you look at a place like the city of Toronto, they've got hundreds and hundreds of planners, hundreds and hundreds of policies, and everything's coded in red tape. Charlottetown, on the other hand, yes, it is smaller, but it just gets stuff done. There's fewer studies that need to be done and so on. And again, that was a big theme of the report, that, cities and provinces tend to be their own worst enemies when it comes to housing.
What, they just too much procedure, too cautious, for example?
Too much procedure, too cautious, absolutely. Taxes that are too high. That provinces that find ways to build infrastructure cheaper and kind of spread that cost fairly across society tend to have much better outcomes than places like Ontario, where we load all of our infrastructure costs onto residential mortgages, which is both an unfair but also a very expensive way of building infrastructure.
And that's, of course, because of these infamous development charges imposed by municipalities.
Yeah, absolutely. Absolutely.
Alberta doing quite a good job. Is that again because they tried to keep red tape to a minimum?
Yeah, absolutely. That Alberta does particularly well on creating new supply. So this isn't just a case that, provinces with slow population growth are doing well, that Alberta is growing faster than anyone, but still able to keep supply up because of that, avoiding red tape and keeping taxes relatively low.
Let's get to the underperformers, and we better jump to Ontario. You're giving the province with the biggest population a D. What is Ontario doing wrong? Because we know that, last I looked, the housing starts were falling in Ontario.
Yeah, absolutely. So Ontario has the highest development charges. We have among the highest land transfer taxes, which causes existing homeowners not to downsize on their home. We have the longest approvals process. So Ontario really gets into its own way when it comes to housing. And both Ontario and BC do a lot of what we call kind of irrelevant policy. So instead of focusing on taxes and reducing regulations, they're doing stuff like foreign buyers taxes and short-term rental regulations and things like this, which could sometimes be helpful, but they don't attack the core problem.
It's interesting. I mean, in Toronto, I guess other communities, if somebody wants to put up a duplex, they have a big hearing involving local residents. I wonder, do we really need to do that? I think the neighbours should have a say, but I don't see why people several doors down the street, they have to be listened to.
No, I don't either. That I think we should make straightforward rules and abide by them. And that's, that tends to be the approach in Atlantic Canada, outside of perhaps Halifax, where they set straightforward rules. And if you comply with them, you can build. And if you don't comply with them, you can't. Rather than making everything so subjective and such, needing all of these hearings and so on.
Well, I know I'm generalizing, but apparently at these meetings, you get a bunch of old, comfortable people who've paid for their houses years ago coming out and saying, oh, no, that would destroy the area.
Yeah, absolutely. I love attending. I mean, I'm close to 50, and sometimes I'll be the youngest person in the room by about 20 years. So that absolutely happens. And you can understand why that, if you are able to reduce competition in your neighborhood, if you are able to keep the number of homes relatively low, that's going to make your home more valuable. And, people as well want to keep their neighborhood unchanged. And I can understand that instinct, but it is blocking young people from ever able to own a home of their own.
And he was speaking with Mike Moffat, founding director of the Missing Middle Initiative. When we come back, Synopsys posted record full-year results in a fourth quarter with revenue topping estimates. We'll break down the earnings and what they signal for AI chip demand after the break. Premium Brands is buying Stampede Culinary Partners for US $662 million in a cash and stock deal. Shares of the Canadian distributor are now trading lower, off by almost 6%. Stampede is a meat processor with a nationwide presence south of the border. The deal is expected to close by next week. Shares of Dollarama are up today. The Canadian company reported a 22% spike in revenue in its most recent quarter, beating expectations. The discount retailer also posted higher profit and same-store sales that exceeded estimates. The boost has led the company to increase its 2026 outlook for Canadian same-store sales. Shares of Walt Disney are getting a bit of a lift today. Not much, 1.25% right now. The company's investing US $1 billion in OpenAI. As part of the deal, Disney is licensing more than 200 of its characters to use on OpenAI's generative video and image platform. In return, it will use OpenAI's models to build new products, tools, and customer experiences, including on its streaming service, Disney+. And taking a look at the markets right now, TSX is up for the day. Again, in record territory, it's up 94 points, 0.3% at 31,585 record high, even intraday record high. South of the border, you can see it's a bit of a mixed day down there. The S&P 500 off by about 1/3 of a point. Dow Jones up by 1 and the NASDAQ down by about 1. Of course, that is being driven by Oracle and concerns over that. It's down. Oracle was down last time we looked at 10 or 12% on the day. Well, shares of Synopsys are higher after the company reported record full-year revenue of a little more than $7 billion US, with fourth quarter sales of more than $2 billion, which exceeded estimates. The company saw more earnings, helped in part by its acquisition of Ansys, an engineering simulation software company, which contributed nearly $700 million in the quarter. Joining us now to unpack the results is Andrew DeGasperi, the research analyst at BNP Paribas. Andrew, thank you very much for joining us today.
Thanks for having me, Roger.
What's there to like about the numbers that we're seeing from Synopsys?
Well, I think particularly the initial guide for fiscal 26 was a lot better than feared. This was the first time they were reporting an annual guide that included the full outlook for Ansys, which they expect to be low double digits. We have some concerns about that outlook, given after having a conversation with management. A lot of it is based on historical precedent and some assumptions being built in. But that said, I think the market saw that as a decent number to anchor their consensus numbers to.
Now, what are some of your concerns? What are you worried about?
Well, for one thing, Synopsys is undergoing a restructuring right now. I think you're going to see some changes across the entire organization. Also, we should note that they had a change in the chief revenue officer at the company. Typically, this brings some changes in the executive team at the mid-level. And we also note that, first of all, a lot of these large type of deals tend to be very difficult and not painless initially. So in the near term, we have some concerns that maybe the growth that they're giving out for the year might not be actually what the end result is.
And what are some of the headwinds are you worried about that they might see with that?
Well, for one thing, I think the broader organization of Ansys is not overlap exactly with EDA. I think only a minority of that business is consistent with what Synopsys does. So you have a lot of people that don't necessarily sell to those same customers. They also sell different products. So you tend to have what I call a difference in culture between the two. The other is that I would highlight that with Intel in particular as well, there's some changes going on at that company, and this was a major customer of Synopsys. And we foresee some potential changes in the mix shift of software licenses, particularly relative to its other competitors.
Is it difficult to try and merge when the companies are somewhat different, or bring them together, bring corporate culture together?
Absolutely, and particularly the larger the acquisition, the more difficult it is. I mean, in software, we can basically count on one hand how many large acquisitions have been made that have been ultimately painless. And what I mean by painless is that strategically maybe they make sense in the long run, and they actually did grow the acquirer company's top line and bottom line. But in the near term, you tend to have a lot of integration issues, whether those are technology related, whether those are sales motion related. And that is something that is hard to predict. So we are underperform rating is based on some of those integration pains that are potentially likely to emerge, as well as some of the issues at Intel, which again are outside of the company's control. But given they were a predominantly large Synopsys customer, it's something that we see some headwinds in, particularly in 2026.
Yeah, I believe you're the only analyst with the underperforming 425 for the stock.
That is right. We see we're a relative underperform rating. Again, we don't see significant downside risk beyond what the market does. But what I would highlight is that it tends to I think most investors tend to look at Cadence and Synopsys and the valuation gap between them as how you should look at both companies. We think that those are very different companies from one another. There is a reason why there is a gap in the multiple, and each company should be judged by their own merits. In terms of why we prefer Cadence. I think it's a much there's a story that has less noise, even though they are similar. They have a much different exposure to the business. And I would also highlight the IP exposure of Cadence is much lower to Synopsys, and that is something that Synopsys has been guiding lower in terms of their expectations for the year.
And now we had reports of NVIDIA took a $2 billion stake. What kind of a factor do you see that being?
Well, I think first of all, I think that $2 billion stake is a huge, favorable, I would say, news headline for the industry as a whole, because it does indicate that NVIDIA sees a broadening of demand of the tools that Synopsys and its competitors offer outside of the traditional chip companies, for example, automotive, aerospace and defense, and manufacturing. And so those engineering workflows are primed to be disrupted by EDA, and in partnership with NVIDIA, we're likely to see an acceleration of the product development, joint product development between both companies. In other words, seeing software tools developed by Synopsys, powered by GPUs that NVIDIA is going to co-produce with them.
And I just want to ask, I just saw this today, if this is a factor at all. A law firm is launching a class action lawsuit against Synopsys, saying the company made false and misleading statements to the market. Have you seen that? I just saw a couple of stories on the wire today about that. Is that a factor at all?
No, I think that typically happens when you see the stock drop a significant amount, which had happened in September when they first guided IP revenue lower, and also the impact from China. Recall that back in the summer, the U.S. government essentially instituted an EDA export ban into China, and that had impacted a lot of the revenues for the EDA providers. I will say that typically we do see class action lawsuits emerge from a significant downside move in the shares. So it's not a factor behind my rating. I would say it is just par for the course. We tend to see that in software when that happens.
Okay. Andrew, thank you very much for joining us today. Andrew DeGasperi is a research analyst at BNP Paribas. Coming up, shares of Oracle are falling today as the latest results have failed to impress investors. More on that when we come back. Shares of Oracle have been under pressure today after the company reported lower than expected cloud sales and a rise in AI spending. Earlier, we sat down with David Sequeira, U.S. Chief Market Strategist at Morningstar, who says the market is seriously doubting Oracle's ability to become a major AI player.
When I look at Oracle, that and CoreWeave, I mean, these are really two of the prime examples that we've been pointing out about some of the buyer exhaustion that we're seeing in some of the AI stocks out there. Yeah, as you noted, I think the market really has some serious doubts about its ability to become a major AI player over time. And in fact, the stock is actually now well below where it was trading even before they made that major announcement a number of months ago that they're making such a huge transformation into their data center build out. So when I'm thinking about this stock going forward, I know management did reaffirm their guidance, so that's going to require really some pretty significant revenue acceleration in the second half of fiscal 2026. So in my mind, I think this is really going to be a show-me story for at least several quarters. I think the stock is going to have to go through a bottoming out process. I think what management really needs to do here is have an investor day, provide a much more detailed roadmap as far as how they're planning on financing the build-outs, providing a much better, greater detail for their free cash flow forecasts in order to help assuage a lot of the concerns in the debt markets, and really put out some better numbers as far as what the return on invested capital projections are going to be. And then I think it's going to take at least a couple of quarters of them just regularly executing on those plans, really to get market sentiment to come back on this name.
Adobe, apparently the market taking mixed signals from their numbers. They came out with a 2026 forecast that was seen as underwhelming, but their Q1 earnings beat expectations.
Well, and in fact, when I look at this name, according to our analysts, they've now beaten our own expectations here, for 6 quarters in a row. So this is one where I think, the market's really assuming that AI at the end of the day is going to end up eroding the value of their products. Our team thinks otherwise. When we're looking at annualized revenue and RPOs, both of those are still outgrowing revenue. I think that sets the company up for a good, 12 months, over the course of the next year. And when we think about, in this case, artificial intelligence, it's really going to be a tool that's going to end up helping them improve the economic value of their products and services over time. So this is another one where I think management really needs to do a much better job to really sway market opinion that their business, is not going to be overcome by AI. In fact, AI will actually be able to help them make more economically value-added products over time. Taking a look at our forecast, we're looking for 13.6, compound annual revenue growth over the next 5 years. Yet the stock is trading, well under 17 times our earnings estimate. So I think this is a good one. Do some added due diligence. Read through the stock analyst notes, but also spend some time, looking at the innovations that Adobe has displayed in their past couple of conferences. And this is one definitely in our mind to watch for 2026. 5-star rated stock. I think it's trading at about a 40% discount to our fair value.
You have some holiday stock picks for us. Starting up with Amazon. What attracts you here?
Well, of course, with Amazon, there's going to be a lot of Amazon boxes sitting on people's porch steps, coming into the holidays, thus far this year. And I think with Amazon, it's really much more than just their retail business. I think the market, significantly undervalues the advertising part of their business. Of course, they have AWS, huge total addressable market yet to come on that one. So a lot of growth still in the stock that we're looking for to, perform over the course of next year. Another one where I'm looking at, 5-year compound annual growth on the top line, over 10%, earnings growth, 13 to 14% over the next 5 years. And this is one that, rarely trades that much below our fair value, currently a 4-star rated stock.
You have another idea here, Mattel, the toy maker. What draws you to this name?
Well, this one's actually more of a swap recommendation than anything else. So last year for our holiday picks, we had recommended Hasbro. I believe that's up, almost 50%, since then. Mattel, very strong core brands, Barbie, Hot Wheels, Fisher-Price. We've had some problems with tariffs. We think that disruption is behind them. We're looking for double-digit growth here in the fourth quarter. We think inventory positions have been cleaned up. They're much more in line with holiday expectations. So we're looking for their turnaround efforts, to pay off in 2026, looking for some operating margin expansion. So this one is, currently a 4-star rated stock, trades at almost a 20% discount to fair value, looks attractive to us.
And then finally, you've got a small cap REIT focused on shopping malls. Is it Macerich? Is that how they pronounce it?
It is, and that's a 4-star rated stock at a 24% discount to fair value. Pretty healthy dividend yield at 3.9%. They focus on Class A shopping malls, the higher quality shopping malls. Overall, I think the death of the shopping mall in the United States is really just greatly exaggerated. The shopping malls have done a great job changing up the portfolios. They're becoming much more experiential. You're seeing them putting in things other than purely just retail to drive foot traffic. Yet consumers still want that in-store experience as well. So this is one that I think will do well over time, especially because the real estate sector, in our view, is probably the most undervalued sector in the U.S. today. Trades at about a 10% discount to fair value. It's going to have some good tailwinds in 2026, ongoing easing monetary policy. We expect long-term interest rates to come down and looking for a rebound in the U.S. economy in the second half of next year.
Coming up, a next-generation obesity shot from Eli Lilly and Company helped patients lose almost a quarter of their body weight. We'll hear from Bloomberg's Madison Muller for more. A next-generation obesity shot from Eli Lilly helped patients lose almost a quarter of their body weight, potentially making the experimental drug the most potent weight loss medicine yet. For more, we're joined by Bloomberg's Madison Muller. If this turns out to be the case, it's a good story. What have you found on this so far, Madison?
Yeah, so Eli Lilly is developing a number of next-generation compounds. They already have a drug on the market today, Zepbound, which is one of the most popular weight loss drugs, especially here in the US. And Lilly is already racing to develop drugs that could potentially be easier to take, easier to manufacture, potentially have less side effects. So this drug is one of those. It's called retatrutide, and it relies on 3 different hormones rather than just 1 or 2, like the drugs that are available today. And so in this late-stage study, which is the first of several that Lilly is running on this drug, patients lost up to almost a quarter of their body weight, which is, like you said, potentially one of the most potent medicines on the market today. And not only that, but patients also saw more than a 60% reduction in knee pain that was associated with their obesity. So potentially really effective not only for weight loss, but also for other conditions like knee osteoarthritis.
Now, do they say in that study the knees getting better? Is that because you've lost the weight, or was that the actual medication helping?
Yeah, I mean, they don't really get into that in this study, but presumably that is, part of it is because of the weight loss. Knee osteoarthritis is a condition that's really closely linked to obesity, and so just alleviating some of that pressure when people lose weight. And there also are some reductions in inflammation with these drugs, is just overall helping people's knee pains.
Now, and there's more work to be done on it. Is there any kind of data as to when we might actually see this in the public?
Yeah, I mean, there are going to be a number of other studies that are reading out into the next year. And so they're studying this same drug in heart disease, in kidney disease, in many different other health conditions, including obesity. And so within, over the next year, we can continue to see a lot of data coming out on this, but it's still probably going to be a couple of years or more until it reaches patients.
And are any other companies looking at similar combinations for medication? You said this takes, I think it's using 3, right?
Yeah, exactly. It's 3 different gut hormones. Ozempic and Wegovy, which are the drugs that a lot of people know, use just 1 hormone. It's GLP-1. I think a lot of people are familiar with that name by now. But a lot of the next generation compounds rely on combinations of different hormones. And that's something Lilly's really leaned into. So this one is 3 different hormones. They're also studying combinations of 2 different hormones, but GLP-1 and something called amylin. There's various different combinations out there. This is something that Novo Nordisk is also looking into, and their combinations so far have not reached the level of efficacy that investors have hoped for. And so they've sort of suffered as a result of that, but they are continuing to study these compounds, as are other drug makers, and we can definitely expect to see more in this space over the next couple of years.
Okay. Madison, thanks very much for joining us.
Thank you.
Bloomberg's Madison Muller. Well, Kirsten Hillman's exit sparked speculation on the Hill as sources say Mark Wiseman is likely to become Canada's next U.S. ambassador. CTV's Mike Couture has more in this report.
We're all in her debt, and I just want to thank her again for her contribution.
High praise from the Prime Minister as Kirsten Hillman announced she will be stepping down as ambassador in D.C.
It's time, I think, for me to start a new chapter.
She leaves as talks around sectoral tariffs like steel and aluminum remain stalled. Today, the U.S. Trade Representative suggested the trilateral trade agreement, CUSMA, may not be the way forward.
Our economic relationship with Canada is very, very different than our economic relationship with Mexico. My sense going forward is we're already talking to them separately.
Sure.
I have not had a meeting this year where I sat with Canada and Mexico in a room and we sat together and talked about USMCA.
I don't know that it's necessarily a bad thing. I think CUSMA is a better thing.
Arlene Dickinson is part of the Prime Minister's Council on Canada-U.S. Relations. She says industry is anxious for the trade war to end. While praising Hillman's work, she believes the next ambassador needs that similar strength.
You need somebody who has the ability to get into a heated discussion, into a room, and bring the temperature down, but also, get our point across.
Are you considering Mark Wiseman as a replacement?
Sources tell CTV News Mark Wiseman will likely be named the next Canadian ambassador to the U.S. He's held a number of senior roles at asset management firms and was the chair of the Century Initiative,
whose stated mission is to triple the population of Canada to 100 million people, a policy that is designed to profit multinational corporations by driving wages down and housing costs up.
The policy that the member across refers to has never been and will never be the policy of the Government of Canada.
With Hillman's departure set for the new year, the Prime Minister says her successor will be named in the coming weeks.
All right, that was CTV's Mike Lecouture. Let's take a look at how the markets on Bay Street and Wall Street are doing as we approach the noontime, the lunch hour. And you can see the TSX is up again today. It's up about 4.5% well into record territory. Intraday highs is what we're seeing right now, 31,634. I think that is close to an intraday high. And some of the movers right now include TerraVest Industries. And just looking to see what that, it's up about 20, oh my goodness, it's up to 21% now. I got excited about that. Not sure what's driving that right now, but just taking a look here at some of the news, see if there's anything on it right now. Fourth quarter beat, and I guess people are liking that, and it is moving right now. It adjusted earnings per share, 83 Canadian cents per share. Estimate was 71. Revenue of 419 beat the estimate of $414 million. So there's part of the driver for that. And just an update on a couple of the other ones that we were talking about earlier. Empire, it is off quite a bit right now. Just doing the math, so looking at some of the numbers, off by about 15%, 9% right now. Okay. And again, because of its earnings miss, high costs were some of the issues for that. And another one we want to take a quick look at is Dollarama. It is into record territory right now on its earnings beat and guidance boost. You can see it's up slightly right now, but it's still trading near record territory for it. Heading down to the U.S., New York. Let's see what those numbers are looking like just quickly here. S&P 500 off. Dow is up more than 1%, and the NASDAQ is down. A lot of that on Oracle. Market call is up next. Bruce Campbell is the president and portfolio manager of Stone Castle Investment. Have a great day.